So what's up everybody, welcome back to another video. Alright, this video will be very extensive. Alright, it will be pretty much a continuation of the first video where I actually showed you guys how to collect data, why you should collect data, etc, etc. Today we're gonna go a little bit more in depth and I'm gonna show you so many more things. Alright, you'll be super amazed. So yeah, let's just dive right into it. So starting off, right, this is the number 2 lesson. This is the second lesson covering data, and of course it's overall the 15th lesson, and hopefully everyone have listened to the other lessons, as this will incorporate the other things I've already taught. Alright, without them you will not understand anything, and of course without ICT and without watching core content you won't understand any of this. This will be too hard for you to understand, meaning I highly recommend you to actually go and do those things prior to actually watching this video. Right, but let's just dive right into it. So why should you collect data? Alright, that's pretty much what this will cover. It will also cover how you create a data collector. It will also cover how you should and should not collect data. Alright, it will also cover things I collect data on, and I'm actually going to show you my data collector in my server, which of course is public now for everyone, so everyone can literally go in and duplicate it, make it their own and change the things to your overall liking, right? So of course we'll also have some secondary things at the end of this call. So we're going to cover the DXY top down analysis, and we're also going to cover Euro USD and do an extensive top-down analysis on that. And of course with the DXY you can translate that to any given asset class, that being commodities, that being indices, and of course to any exclusive forex pair as well. Now of course I'm also going to share some real extensive TSE sauce in this call. So of course the first thing you're gonna start with is actually that you want to click on this little. So when you're on Notion, when you have downloaded Notion, please click on this. Alright. Well, there you'll pretty much see something like this where you actually are in a new page. And what you want to do is click on these 3 dots like previously covered and click on table. That will overall bring you to this site, and in here is where your overall extensive stuff starts, right? In here is actually where you're gonna overall annotate all of the things. You're gonna pretty much note the things down which you overall wanna have in your data collector, the things you wanna overall pick up on, but also the things which you think is important, right? That being, you could even add a little small text, meaning you can journal in it, right? And you could also, I think there is a thing called connect, or yeah, something like connect, and where you actually can connect a page to it, which is something I really use a lot, alright, because that's just such a go-to thing. So overall, why should you collect data? You should collect data because literally that's how you know you're profitable. Without the data, you really don't know that you're profitable, right? It's like, I usually say this, right? It's like gambling, not knowing your data, because then you're literally trading without statistics. You're trading without statistics and probabilities behind you, right? How do you think yourself you're gonna predict the future without knowing what's most probable to happen, right? That's why I'm a staunch believer in intuition trading, because I don't really believe that intuition trading works for the long run, right? Imagine not having or knowing 100% that, you know, from your previous encounters something will happen. Instead, you're relying on pretty much your stomach feeling, which is something like, I just think it's totally like crazy. I don't know how people do it. I was never able to become profitable with using overall intuition trading. Instead, I fully became profitable when I realized having probabilities behind me pretty much secured everything, alright, for me. Alright, it secured my system because then I pretty much knew I was profitable, like the first one in here, or first pretty much little question here. It also pretty much taught me that I know it taught me like the whole process, to focus on the whole process rather than the individual trades, right? I think at least when I was intuition trading, I just focused on the individual trades. I was taking different approaches or different overall setups the whole time. I was taking different amount of overall leverage. I had a different amount of pips in the stop loss, right? And to the take profit as well. And so like all of the things was just moving around, and I like having things which overall stays the same, right? That overall helped me a lot, right? Because when you're intuition trading, you just focus on an individual trade, right? You're not focusing on the whole process. And what I like to do, right, and what I do is focusing on the whole process rather than the individual trades. So pretty much, oh, my system have like this amount of win rate and this amount of RR, right? And when you really know that, right, what you're gonna develop is, of course, that perspective of the whole system. So you know that over a period of time, just by following the system, you will overall have this and that amount, make it this and that amount of profit. So rather than just looking at the single day P&L, you will focus on the yearly P&L, and of course the whole process of the P&L. Now, of course, this is also how you learn to know your system, right? You literally you learn what works, what does not work. So you learn, like, for example, whenever you're trading against the weekly buys, your system do not usually play out, right? Then you fix that. So you overall trade with the overall weekly buys, right? Instead of trading against it, right? So that's just one example, right? But you pretty much learn exactly how your system works, the ins and the outs, and that's what I think is one of the most important things, at least. All right, because this is also a thing I think personally when I was trading intuition trading or discretional trading, that's another word for it, right? I did not really know what I was looking for. All right. And I did not really know what worked and what did not work. But with this, overall, you know it will work because overall your system will be profitable. And if it's not profitable, you make it profitable. And here's the truth, right? Like, you can see the people on YouTube, for example, posting, oh, this setup have this and that amount of win rate and this and that amount of risk to reward. That's not really the case. As an individual, you'll have different amount of win rate and RR because we all are different. You're not, you don't have the same intuition or same background as the other person, right? So your win rate and RR will be totally different. And of course, just a slight change can cause the system to not be profitable. And how would you know that? Alright, so it maybe works for them, but how would you know it works for you? Yeah, without data, you don't really know it. But with data, you know it and you know how to fix it. So you know how to make it even better, right? Because at the end of the day, you're looking at the data, you're looking at the hard data, and that pretty much means that when you see something that does not work, right, you can just change it. Right? You can just change it totally. Right? And with intuition trading, you will never know it or without collecting data, right? This is why journaling is, of course, also, I think it's overrated because I don't lay so much time on the emotions, right? If you're just focusing on the emotions when trading and not pretty much the categorization of the specific setups you're taking, like, the emotions is maybe good focusing on, right? As I said, you can pretty much add the emotion side to the data collecting if you would like, right? And I'll show you some examples later, right? However, what I like to do, right, because the emotions won't tell you what the model is doing right and what the model needs to improve and what the model is overall, what does not really work with a model, right? That does not really the emotion side of journaling tell you, right? I don't know what journaling says or what pretty much the journaling part means to you specifically, but for me, journaling is like journaling your emotions. For me, data collecting is how pretty much why I am profitable, right? It's literally everything. It's like the holy grail, all right? I would say data collecting is the holy grail, definitely. So as I said, this is how you know what to improve upon your system, but also it's how you learn, right? So by just looking at and creating a library of the trades you've previously taken, you can go actually back and look at them, alright? And you can look at the things and notice certain things when, of course, when you improve your trading, right? So for example, you learn something new, then you can actually go back because now you have also a library of the given trades and given wins and given losses you have taken and given break-even trades you have taken. Because I'll show you my my data collector, which I've made public now for the ST. Alright, and in that you can actually specify, so you can just look at the wins, you can just look at the losses, and I'm going to show you all of that later. But of course, this also helps you to not improve the same mistake again. Just by journaling, or you know, just by journaling your emotions, you won't know your mistakes. You don't, you won't know pretty much what you did right, and you don't really know what you did wrong either, right? By having this library of the given trades you have previously taken, you pretty much know everything about your system, like I've previously said, which will overall help you improve, right? And of course, this also, if you know that this pretty much helps you to understand if you're the thing which makes the system fail, all right, or if the system is failing you, all right. And what I mean by that is pretty much that imagine you're trading, right? You collect the data, you collect the forward test, you collect the live trades you taken, and if now the data comes out as profitable, however you have not made money, that's your fault. As then maybe you pretty much, you know, entered too early, exited too early, changed something in your systematic approach, and of course, if your data does not come out profitable, but you execute it completely right over a period of time, then it's maybe your system's fault, and then maybe you need to look over your library of the given trades you've previously taken, so you can adjust your pretty much edge so it becomes profitable. All right, makes total sense. So this is also how, this is pretty much what I covered in the other call as well, but this is in the first one, right? And I'll link it here as well, so please check that out as well if you haven't, because that's also super important, and you get so much more information just by watching that as well. But of course, this is how you should collect the data, all right? Or at least this is how I collect the data. So you can't backtest the data, all right? For you to predict the future, all right, you pretty much need a future to predict the future, all right? That's pretty much what I say to myself all the time. But don't backtest. The only data you should use is forward tests or live trades you're taking, all right? And once your system is profitable, don't just stop collecting the data. Always collect the data on the trades you're taking, be it live, be it a forward test. Always collect the data. It does not really matter as long as it's no hindsight, all right? Because as soon as it's hindsight, you pretty much are not faced with the same problems as when you have no hindsight, because then you pretty much need to look and predict what the future outcome will be in that given situation, right? So like I said, you pretty much can't use hindsight, because then your data will be totally skewed, all right? Totally skewed, all right? You can't use that data then. All right, and you should collect between 100 and 1,000 data sets, and of course this is if you have no previous experience, right? And of course it needs to be forward or live, right? Live trading, and it needs to be a mechanical approach to actually collect data. So you can't have some moving parts to the system. Of course you can have some moving parts. Of course it's also up to you and your personal preference to decide which things need to be intuition, and which thing do not really need to be intuition or discretional. So it's all up to you. But anyways, now I'll show you the rest of the things in my server. And my data collector right here. So it's like in the resources, scroll all the way down and you'll see the data collector, and then you just click on it. Alright. Once you have clicked on it, it will take you pretty much here. And here's pretty much an example. And you can see the link here as well for it. So you can pretty much join that as well. But let's just dive right into it. So of course this is just an example, right? This is actually a trade I took. Or I predicted it, I forward tested it. But I think I took it as well. I think I have some pictures at the end, which I will go through, of course, as well, so everyone can see. And of course, this like proves the date, etc., etc. And I think I also thrown in some executions. But otherwise, I will just link it here as well. But of course, this was on the 8th of October. So pretty much here's the thing I collect the data on. All right. So here's the thing, pretty much, which is of importance to me. That does not really mean that it's of importance to you, and that's why I want you to duplicate it, right? and then save it, and then you can pretty much make your own changes to this. So you can add the things which you overall would like to prefer to add in, right? That could be like, for example, like journaling. So that could be like a thing with a text, right? A box with a text. It could be any other given thing. All right, it's just up to you and your imagination to pretty much, and of course your thoughts, right? To decide that. All right. But this is pretty much all the things I collect data on. All right, which is of great importance to me. Of course, this is not my real data collector, but it's a like mediocre version of it. All right, the students get a much more extensive version, but this is still of real great significance. All right. So overall here you have the number of trades. This is the number one. I just wrote an example here. And this is the date. The date is real important, and it's of importance thanks to, of course, that it tells you which day of the week it is. So for example, if you're expecting like an Tuesday reversal profile, this is at Tuesday reversal profile actually. That's why I pretty much told the example. But it could as well, equally as well, be like a Wednesday. You're looking for like a Wednesday weekly profile or daily profile. But it also tells you specifically the month. So you can like when you're going into wins, losses, break evens, which is a thing I've added as well, you can pretty much go through and look at pretty much when the best month you have. So you pretty much know which month is the best for you or worst for you, or which months you pretty much should stay out of the market completely, right? And you learn by this, all right? So the more data you have, the more reliable it will be as well. So that's why I recommend between 100 to 1,000 if you're like completely beginning. All right. Otherwise, data will be skewed still. 100 is when when you should rely on it fully. All right. So that's when you should start rely on it fully. But it also depends on your model as well, right? Your model can maybe be like take a long time to play out in a forward. It could maybe be like swing trading. Then I would recommend like 20, 30, right? But it depends, right? How long it actually takes to play out, etc., etc. But 100, that's pretty much reliable data, and the more the better. That's and of course the more you trading, the more entries and the more models and mechanical trading edges you see in the market, right? The more data you'll pretty much end up having. So with time, you will pretty much have an extensive library of the trades you've ever taken on that given system, which will give you even more reliable data. And another thing I like to overall take in consideration is the given pair you're trading. I don't think you can go in and click on it, but if you duplicate it here, you will see pretty much all of the things I have annotated here. Then pretty much you have sessions, and in the sessions, right, this is important as this gives you, or kill zones, this should be kill zones, I'll change this as well. And I'll also add in a win-loss ratio, so you can pretty much have that already calculated here. You can just click on it. That will also be implemented once you're actually seeing this. This gives you the time, so of course this will also must tell you which time your model preferably works the best. Alright? So it will tell you pretty much. Let's say you see like a 930 sweep, because this is like the TSE or the STE model data. So let's say you're seeing an 930 sweep, right, of a 930 long-term high, right? Let's just take this as an example, right? And then your entry is a little bit later, as the market is pretty much retracing and you have not come across any macro because it was literally 930, which is, the sweep was, let's say it was 1030 off the 930 high. Then you're pretty much waiting for the next macro, which is of course 11 or 1050 then. So then that would be your entry, and that is of course in the London kill zone. So then you would annotate the London kill zone, right? That's pretty much in the London close of the things. So that would pretty much give you the same thing as the date, right? It will give you when it works the best in a given time. It will also work. It will also tell you pretty much, when it works the worst, etc., etc. Like it tells you a lot of things, right? Of course, then you also have the news. So if it's an extensive news day, that could maybe have some impact. Maybe your system becomes better when you're trading in the news events. All right, just up to you, right? Maybe your system becomes even worse when trading actually in the news days. Um, so of course, in here on the Tuesday, on the 8th of October, we did not really have any news, by the way. Then of course we have weekly. This is overall the weekly order flow. So of course, are you bullish on the weekly order flow? Let's say this was bullish, right? We were bullish here. Then you of course have which order flow it was on a daily, 4-hour time frame, and 1-hour time frame, 50-minute time frame. And you can see here we were actually bearish on the daily, and we were bearish on the 15. So I was looking for downwards and down ST. And of course this has to do with daily profiles, etc., etc. So you have to take a lot of things into consideration, right? Now, of course, we actually saw a sweep of the 930 high, and we were targeting sell side liquidity, but also buy side imbalance, sell side inefficiencies, right? So we're waiting for overall in a bank order flow to the downside, repricing the business and offering sell side to the buy side inefficiencies, right? You can see here, overall, the entries was a total soup and a macro. And of course, we actually trade into a key level prior to it. And that's the STE sauce I want to give you guys in overall this little lesson as well. And I'll add it in at the end of this when actually going through it. And that's overall trade in key levels. Alright, don't ignore key levels. If you have a key level and the market pretty much trades up to that key level in a macro, that should be your total soup entry. Alright? And I'll show you an example of this actually here as well. So of course this was the time frames I used. I used the weekly to the 1 minute. I used weekly for overall, top-down analysis. This pretty much tells us top-down analysis. Why is this important? As this tells you pretty much, let's say you only, scalping, so 50 minutes, etc., etc. Maybe it does not work. All right. Oh, then we maybe will go up a time frame. So maybe it just jump to the 1 hour, right? Or maybe in time frame you're not really using, and pretty much your system is not profitable. Then maybe add it in and test. So test that given order flow and add that given order flow in as well into your analysis and take consideration to that order flow, right? It's just up to you and what you see your system lacking, all right, in that given time, right? Then of course you have the stop loss in terms of pips, and the first take profit, second take profit. This will overall give you the numbers, all right, and the numbers is really really important. So this overall gives you, like, for example, I usually get stop loss out if I'm actually below 4 pips. I've noticed in the real STA model. So when I'm trading the STA model, I noticed that once I actually have a stop loss below 4 pips, I get stop loss out, and that could be it for spreads, etc., etc. Now I just changed that thanks to the data, so now I'd never go below 4 pip stop loss. And of course you have the take profits, second take profit, and third take profit. So here it was 10 and 20, and of course this also measures, for example, like when your usual your average, right, partial will be, all right, and it will tell you pretty much when the best partial is, and I've explained it in another call as well. And of course this pretty much goes through which take profits actually got hit, and this was ended up being a 1 to 5 and a win. So let's actually go in and click on this. So you can see the STE model, right? We had the 930 high right here. You can see 930. I think this was. But it was I think in that period as well. You can see this high sweep right here. I think this was the next macro. We traded into a key level. I'll show you that key level. Of course, here you have the SB, so Silver Bullet London actually was here. It could be scale in. Here was the first partial as I've taught. So first partial, second partial at Asia low. And of course, you could have even continued taking a third. But of course, that would be up to you and up to what your data suggests, right? Now let's actually go in and look at the second one here. So here you can see pretty much I called this out. So I think you can see the level in here. You can see the down drop movement right here. You see the level I've marked out right there. So I actually had an ST up here, as everyone can see here. So ST up here. And then of course I was looking for this key level. I had pretty much exactly this level marked out, and we got an ST here. And this was, of course, when looking at this for flag gap, it was 25% mark off this. Alright, you looked for a Tuesday reversal. We got a Tuesday reversal, ST, downwards momentum, take profit 1, take profit 2 from the previous order flow, or in a bank order flow actually, on a high time frame. Now, let's just overall go through the other things. And of course, this will be pretty quickly. I'll not go through any higher time frame, etc., as I've previously done that. Alright, the other calls is closely linked to this one, so please go and check that. Those, I'll link those here as well. Those are really important, as then you'll pretty much see me calling out this with no hindsight, right? Because I've called all of this shit out throughout the whole year, so please just watch my YouTube, alright? You pretty much see everything with no hindsight, right? But pretty much what I've said is that we'll form a regional consolidation in here. That's precisely what we have done now. And you can see we've pretty much formed a reconsolidation in here. Now I think on Monday we will pretty much be a little bit consolidated. And on Tuesday I think we're actually going to create an high here. Hopefully take out this and hopefully take out this. Maybe even taking us up here, alright? I don't really think it will take us all the way up here, as that pretty much we would have a real big buying program. But Monday is actually a US bank holiday. But if we actually not consolidate, I think Monday will go higher and Tuesday will go higher, and of course then this will probably be the small money reversal, and that will overall cause us to pretty much do the sell side of the curve, right? And on the sell side of the curve, we're pretty much gonna have a reconsolidation in here. And what can you use? You can use a great price swing, as then pretty much the institutional order flow starts again. Now, of course, on an intraday basis, that would pretty much look something like Monday either continuing a consolidation in here, Tuesday expanding upwards, continuing with a manipulation, maybe even Wednesday up to Thursday, and then Thursday or Tuesday creates the high, and then of course we trade lower. Oh, not like that, but then we trade lower. So I'm actually seeing soon and high get us held in. Why I'm not calling out and high is simply because you already know where the high will get created. I think it will get created in here. Plus I'll have time to have much more calls covering all of the extensive stuff, right? This is just a quick little reminder for what to look for, right? So now, of course, going to EURUSD, we'll pretty much go through vice versa. So what I'm looking for, right, is of course a consolidation on Monday or a sell program. Tuesday expansion lower or manipulation lower. Trading into, of course, our level. I've not overall shown you guys this level yet, as that's just for the students. I'll think I have time to show it to you guys before this actually happens. And of course, a distribution upwards, right? So maybe Tuesday consolidation or Monday consolidation, Tuesday overall manipulation lower, or Monday manipulation lower, Tuesday manipulation lower, Wednesday maybe even continuing the manipulation, Thursday low, and then higher prices. That's the two different scenarios I have. This was just a quick little hint of what I'm actually looking for. Nothing real extensive, as I'll have another call with for everyone just covering this as well. That would be, of course, maybe tomorrow or some other day, but this will overall be one of the most extensive calls ever in terms of the data, right? So thank you all so much for this, and see y'all. Bye, guys.